How's it going, everyone? It's Sam. I want to do something that I haven't done in a while, which is talk about how I would invest $1,000. Now, before I get into it, I do want to say I recorded this and the video from my face and everything, there's some technical difficulties with that, so I apologize, but it's just going to be the screen, but I think you guys will get a lot of value from this. I think I've done this in the past. I know that I've talked about the three stocks that I would buy if I could only buy three stocks or one stock and stuff like that, but I wanted to go over this. I think it's going to be helpful for people that are new to the stock market, kind of getting an idea of what proportion of my money I put in different areas, and it's definitely going to be more clear than when I just show my portfolio because I have a lot of different positions, but my portfolio is at a very different size than $1,000. I think too, you can extrapolate this and, change it around for your own portfolio, but it's definitely going to change, right? Because let's say you have $1 million portfolio, putting 1% of your portfolio in some penny stock, let's say, might make sense, but at $1,000, it probably doesn't make sense to do the research to invest $10 in a penny stock. So there are going to be some changes, but I'm going to go through exactly how I would weight it and some companies that I personally would be investing in if I was in that situation. So if you guys like this, please leave a thumbs up. Let me know that you like this kind of content. Let me know that you want me to do stuff like this in the future. Also, hit subscribe if you haven't already hit subscribe. I don't know where we're at now because I'm pre-recording this, but right now we're sitting around 98,000 subscribers, so you could be the 100,000 subscriber, which would mean the world to me. That's just insane to think about. Also, there is a link down there to Patreon, so if you want to know what I buy or what I sell in real time, I did just sell a penny stock right before I filmed this video. So if you guys want to know, what I'm doing in real time, you can definitely check out that link. And there's a link down there to WeBull. If you want some free stock and you want to deposit $100, you can start off your portfolio or just transfer it over or do whatever you want. And it does help out the channel a lot, so I really appreciate that. It does, like I said, it helps me a lot. It pretty much pays for a date night with my girlfriend and myself if someone signs up and deposits $100. So I appreciate that. Now, first of all, you have to remember what I was talking about, right? If you have $1,000 in a portfolio, it probably doesn't make sense to do anything that's less than 5% of the portfolio just because it's not worth the time to research. Now, I would be cautious because I think 5% of your portfolio in one penny stock is a little bit high. I mean, I don't do that. I know some people are extremely comfortable with that, and it depends what kind of investor you are. But you have to realize some of these penny stocks do go down pretty significantly, and the thing is, it can go up a lot but can also go down a lot, so that is something that you have to kind of weigh for yourself. Now, if I was going to invest in penny stocks, if I wanted that to be part of my portfolio, which honestly I wouldn't if I had $1,000, because I could just work for a couple hours and make $50. Even if you work 5 hours and you get $10 an hour, I would rather put that time to work and actually make more money and maybe increase my skill set or something like that. Because if I get, let's say I get 100% gain and it's a 5% of my portfolio, that gives me $50. But if I was going to, like I said, I would put in about 5%. Now from there, let's say I didn't do penny stocks, because honestly, I wouldn't personally do it myself. And we're gonna say too that I can't invest in index funds because that would be an easy way to invest. I think that's what a good majority of people do, and that's actually a good option if you want to do that. But let's say you don't do that. I would go on and I would keep about 20 to 25% of my portfolio in cash, and I'm only doing that because of the environment we're in right now. There are a lot of stocks that are actually pretty easy to pick out if you're paying attention to the market. A lot of SPACs that do quite well. So the reason I say that is because I was just taking a look at my brokerage account, and I've been selling some SPACs, but I've been mostly holding on to them because they've done so well. Now, some of the ones I'm holding on to right now, CIIC, and I've been in this one since I think $13 a share. Now it's up around $28. VGAC just announced their merger today. I got in when they were under 11. They're up around 15 to 16 right now. LGVW, I got in a little bit late on, but honestly, I'm still up a decent percentage. I think it's 20% in a few months. SBE, I'm up over 100%. That's a charging stock. SPCE is now one of my greatest gaining stocks. I think I bought in at 17 or 18 cost basis, and I'm up like 200% or something like that. And maybe my cost basis is a little bit higher, but I'm up around 200%. MP Materials, I'm up 30%. BFT, I'm up like 30 or 40%. DMYD, I believe this one was a spec, and honestly, I have a small position and haven't looked into it recently, so that one is up about 55%. CCIV, I'm up over 100%. And then IPOE, I'm up about 80 or 70% or something like that. And if you don't know about SPACs, they start off at around $10 a share. And then from there, they actually have limited downside because you can call your broker and say that you want the $10 back that is kind of backing the stock. So if you don't like who they're merging with, you can get your original $10 back. Now, if you buy at $12, then you're risking about $2. And after they go through with the merger, because they're just a private company, or they're a public company that's merging with a private company to take it public, after they go through, the stock price can go to whatever. But generally, all of these have been doing quite well. So I would keep about 25% of my portfolio in cash, just for these types of SPACs where I can jump in it. And, if you can jump in with a good management team before they announce, that's probably the best option, but that also can take a while. Like PSTH is one that I didn't include on this list, but I've been in for a while. I'm up like 10 or 20% or something like that. But I've been waiting 4 months for that, and they still haven't announced who they're merging with. So I would be cautious about, putting it into a stock that is like probably a year away. I mean, it can still get great gains, right? It could still go up 40% a year from now, and that's actually a really great return in the grand scheme of things. But you can also jump in a lot of these like right when they make the announcement. So that's something I would consider. Now, there are a handful of stocks too that aren't on this list that I'm still invested in that are SPACs too. So don't read into it too much. I just looked in one of my accounts to see what I had that were SPACs. Now, from there, I would probably put 25% in a growth stock. So I would put it, specifically for me, I would put it in Tattooed Chef. Now, the reason I say this is sitting around $24 a share. I really like this one. It's in the plant-based food industry. Even though I've never had their product, I've tried to actually go find their product. Even though I like meat a lot myself, I'm thinking big picture. Look at their revenue. Look at this growth. They're expecting $220 million next year. And I think that this might be a little bit low. Now, something else to consider is they are a lot cheaper than some of their competitors, like Very Good Food Company, like Beyond Meat. So that's something to consider too. Now from there, I would want 25% in there because honestly, any more than that, and I don't like how much risk I have. But again, any less than that, it's not really worth the time. But that's just where I would put it. And again, like if I don't mention a company in here, don't take it personally. There are a lot of stocks that I like that I'm not mentioning in here. But from there, I would pick something a little bit safer. After Tattooed Chef, I would pick something a little bit safer that I think still has decent growth prospects, and that's Disney. So Disney, I think, is the ultimate recovery play between their parks that eventually will open up and bring money in, and then also their streaming, right? So if we stay kind of shut down more, their streaming is going to do extremely well. Now, this company has risks to it. That's why it's at a price that's pretty interesting because they do have risks. However, take a look at their prior guidance. And I believe this is as of a year ago. They wanted 60 to 90 million subscribers on Disney Plus by 2024. They already hit that. They're almost past that 1 year later. Hulu, they're already right short of where they wanted in 2024. And ESPN is on the high end also, or ESPN Plus. This is a company that I think will become leaner and meaner as time goes on. They're going to reinstate their dividend most likely pretty soon. At least that's what they've told us. And I think that they'll be able to grow continuously. And they're already a big company, but I think that they have room to grow. And honestly, I've been buying them for a while now. I think since under $100 a share, and they're at 175 or 180 now. I'm still bullish on this. And then the last company that I would buy, so I would have 25% in cash for SPACs. I'd have 25% in Tattooed Chef, 25% in Disney. The last company is one that actually pays a dividend, and I'm not buying it because it pays a dividend, but I'm buying it because I think that has decent growth and it's very profitable. And that's JP Morgan. So just look at their revenue here. Now it's off a little bit because of last year. I mean, last year was a crazy year, but look at the growth there from 55 or 56 billion to 64 billion to 76 to 84. It's very consistent, and they're already very profitable. So this would be a less risky position to put in the portfolio. Again, like 24 million, 24 billion, 24 billion, 32, 36. This is their net income, and they do pay about a 2 to 3% dividend right now. So I would put this as the other 25% in my portfolio. Now, again, index funds are great, but if you want to invest actively, these are the stocks that I personally would be invested in. And again, it changes, right? So I have close to 100,000 in the market, and I've done portfolio reveals before. So my investing strategy is very different. I'm more risk averse in this. I'm not investing in 4 companies. I'm investing in a lot more than that, and I'm churning in and out of companies a lot more. But this would be a nice way, I think, of approaching it. If you did have $1,000, even if you have $10,000, I think it would change, right? I'd probably have about 5 to 10 companies instead of 3 or 4. I'd probably be close to 10. Now I have a lot more than that, but I'm trying to keep it around the same amount, or even dwindle it down a little bit so I can take advantage of the companies that do really well by having a bigger stake in them. Now, let me know your thoughts below. What stocks would you have, and what positions or what percentage of your portfolio would be in them? I'm really curious. So maybe give me 4 different companies, or 3, or however you want to break it down, and what percentage of your portfolio would be in each. I would love to look back at this at a later date and then take a look at how we did. So again, leave that down below if you guys don't mind. Please hit the like button. Please hit subscribe if you haven't already done that. If you do want to see what I buy and sell in real time, I did make this video on REZZF recently, and we were able to sell up over 100% in one day. So if you want to check out the Patreon, it's down below. Also, there's that link to WeBull, and there's a link to BlockFi if you want to invest in cryptocurrency. I've been investing in it myself, so definitely check that out. Thank you guys, and